Hi, it's Andy Hoffman, Marketing Director of Miles Franklin Precious Metals in our 26th year in business. It's Thursday morning, September 24th, 2015, and the title of this week's very important audioblog is Seminal Events for a Collapsing Global Economy. Well, even I am in awe of how rapidly history's largest, most destructive fiat currency Ponzi scheme is coming apart at the seams, to use the title of an article I penned last week. As I write, countless global currencies, from first world to emerging market, are hitting new all-time lows. Wait, what's that I hear? Yet another supposedly rock-solid currency, the oil-dependent Norwegian krona, is hitting a new 13-year low, as its lunatic central bank, like so many others in today's nuclear phase of the final currency war, thought it wise to reduce interest rates to nearly zero, with the krona already free-falling, in what can only be viewed as a desperate, nonsensical bid to destroy it. It's not just commodity currencies, of course, but isn't it ironic that, amidst unparalleled, historically disproven propaganda about gold's lack of monetary value, gold is hitting new highs daily against said commodity currencies, which I assure you is decidedly not occurring in the copper, zinc, cotton, lumber, or wheat markets. To wit, gold is not only a whopping 30% above its prior record highs in Brazilian real and Russian rubles, going more parabolic each day, but just yesterday it hit an all-time high in South African rand. Not uncoincidentally, on the very same day, the rand hit an all-time low, which I might add has gotten significantly worse this morning. Yes, my friends, I wrote yesterday of how the entire South African gold mining industry is in danger of going bankrupt. In the case of companies like Harmony Gold, potentially by year end. And yet, the South African gold price is at an all-time high. How can this be, you ask? Simple. It's called the horrors of a fiat currency regime, which, like stocks, bonds, and money like gold and silver, causes capital to flow towards liquidity during times of crisis. Not to mention that nations who rely solely, or nearly so, on commodity exports, which I might add, describes at least 3/4 of the total, are utterly decimated during recessionary times, which this time around features an historic, unprecedented oversupply of nearly all commodities. And no, it's not just the rand, which arguably is being destroyed by the financial machinations of the gold cartel, or borderline third world nations like Brazil. No, it's supposed first world nations too, like Canada, where gold is just 15% below its all-time high, and Australia, a mere 10%. Think about it. Australia, where its entire economy, not only based nearly exclusively on commodities, but boasting the collapsing Chinese economy as its biggest customer, is watching its corporations go bankrupt due to imploding oils, metal, and other commodity prices. And yet, Australian dollar price gold is just 10% below its all-time high, which here in America would equate to roughly $1,800 an ounce. That is what US dollar price gold would trade at the least if the cartel weren't around. Which of course it won't be forever, perhaps not even another year, as per what I wrote in last week's Story of 2016, not to mention this week's Occam's Razor in the upcoming historic silver shortage and future of gold and silver mining in pictures, in which I depicted the not only inevitable but imminent collapse of gold and silver production, the odds of a massive 2008-like precious metal shortage slamming into the world like a runaway train could not be higher. Likely by the end of next year, if you ask me, the way current supply and demand trends are going. In other words, just as the London gold pool was defeated in 1968, the far more destructive New York gold pool will be shortly. And when it does, you had better have your stash in hand, as likely you won't get another chance. Certainly not anywhere near today's historically suppressed levels, way below not only the industry's cost of production, but the cost of its long-term viability, which in many aspects has already been destroyed. Back in July, I asked if the big one had commenced. That is, the collapse of confidence in central banks' ability to save us, the universal realization that in fact they are destroying us, and consequently the swamping of rigged financial markets by economic Mother Nature and the unstoppable tsunami of reality. To which I cannot more emphatically declare yes. Frankly, even I am amazed at how rapidly history's largest house of cards is imploding. And trust me, seemingly random events like the suddenly exploding European immigration crisis, rapidly escalating nuclear tensions in the Middle East, burgeoning secession movements, and unparalleled catastrophic corporate scandals, which I'll get to in a moment, and the sudden realization of the world's hideously ominous demographic trends, to name a few, are not occurring by coincidence. To the contrary, they are part and parcel of the big picture of political, economic, and social deformation caused by 4 decades of fraudulent fiat currency, which cumulatively attempted to usurp economic Mother Nature, who, as always, is not only fighting back, but decisively winning. And nowhere more so than the vile central banks themselves, run by a handful of sociopathic politicians and bankers, whose seeming job is to destroy the hopes and dreams of 99% of the population and their unborn descendants, for the benefit of the 1% that either own or fund them. Again, I cannot be more emphatic in my belief that the so-called ground zero of said endgame will be collapsing faith in central banks' ability to control economies and markets, and to the contrary, a growing universal realization by said 99% that not only are central banks completely helpless, but they have been the principal source of our miseries, and thus must be destroyed, and their cancerous fiat currencies with them. To wit, last week's seminal event of the Fed not only maintaining zero interest rates despite relentless, moronic I might add, propaganda to the contrary, but suggesting that zero or even negative interest rates might prevail indefinitely, may well be the straw that broke the camel's back. And trust me, when the inevitable Yellen reversal arrives, that is, when collapsing markets force Whirlybird Janet into hyperinflationary NERP and QE4 schemes, which will only make things worse, but perhaps stave off all-out collapse a tad longer, said endgame of global fiat currency annihilation will be imminently upon us. And frankly, the way things are going, I would be shocked if said Yellen reversal didn't occur by mid-2016. Heck, the fact that last week's unexpectedly dovish FOMC statement caused stocks, commodities, and foreign currencies to not surge as usual, but plunge, should tell you all you need to know about how close we are getting to said catastrophic endgame. Or how about the world's largest banks now overtly calling for hyperinflation, such as, ironically, Australia's Macquarie Bank saying, quote, "Instead of acting via bond markets and the banking sector, why shouldn't the public sector bypass markets altogether and inject stimulus directly into the bloodstream?" In other words, they're suggesting central banks should print money and inject it not just into banks, but Main Street as well. In other words, suggesting the famous helicopter money drop strategy that has yielded hyperinflation in every instance it's been tried. Or better yet, none other than Citigroup, i.e. the most bailed out bank in history, which I might add remains hopelessly insolvent, stating yesterday that, quote, "With interest rates already at zero, massive fiscal policy will be needed to offset any negative shock that hits global economies. The only practical way of doing so is for central banks to indicate that their balance sheets will remain large permanently and keep expanding if targets are missed, opening the door for either additional spending or lower taxes financed by the central bank." In other words, an even more aggressive helicopter money drop, in that, unlike Macquarie's suggestion, Citigroup literally calls for both ZERP and QE to infinity, which of course must occur to maintain the fiat currency Ponzi scheme to its bitter hyperinflationary end, which I assure you such policies would bring to a head sooner than later, as in much sooner. And now that the world's largest financial institutions, and ironically its worst fiduciary custodians, are actively calling for said lunatic policies now, and overtly so, you can bet the time before their real-world implementation occurs is very, very short. Okay, it's time for a brief break between the aforementioned big-picture horrors and the upcoming seminal events suggested by today's title. As I write, at 8:30 a.m. Eastern Standard Time, the U.S. government just released 2 more data points that ought to push Whirlybird Janet a few notches closer to said Yellen reversal, starting with the Chicago Fed National Activity Index, which plunged from July's positive 0.34 to August's recessionary negative 0.41, followed up by the Durable Goods Report, depicting a 2% plunge in August manufacturing orders. And what's this? Caterpillar, the world's largest mining equipment manufacturer, fresh off its 33rd straight month of declining sales, just reduced its revenue outlook and announced the layoff of an additional 10,000 workers. In other words, an utter disaster for the soon-to-be-extinct recovery propagandists. As heck, this data emerged before the recent catastrophic plunge in commodity prices to nearly 40-year lows. Or for that matter, the latest leg of global currency devaluations and collapses, and of course, rapidly declining economic and financial data of all kinds. To that matter, I can't wait to see what happens if if yet another government shutdown occurs next week, given that the government is now the largest employer in the nation and the largest contributor to so-called GDP, let alone what the new debt ceiling will look like next month once the current round of extraordinary measures such as accounting chicanery and stealing from public pension funds are exhausted. Be prepared for the national debt to surge by at least $500 billion the day it's implemented, as the hyperbolic growth of America's debt load meets head-on with the Fed's rapidly waning ability to even purport hope of ever escaping the zero bound. Okay, let's get back to said seminal events, each of which is capable of being the catalyst of the final epic plunge, but cumulatively serve as a virtual wall of political, economic, and social horror with no chance of ever being overcome. Not, that is, until the world's historic debt load is defaulted and fraudulent currencies eliminated, and in between, unfortunately, perhaps the most difficult times the world has faced. Which I don't say to fearmonger, but simply to state the facts of human nature and its ugly history, particularly as relates to the aftermath of fiat currency regimes, which have never been utilized in the global fashion witnessed today. To start, last month's Death of the BRICS article highlighted what I have been all along screaming. That is, that there is nothing patently exceptional about these five nations other than their large cumulative global footprint, if only in terms of population sizes. All five, or should I say four of the five, as the yuan is, for now, still pegged to the dollar, have currencies trading at all-time lows, for a variety of reasons, from political to economic to monetary. However, Brazil stands out as a particularly ominous situation. As we speak, its real currency is in freefall, and rumors of an imminent military coup are rapidly swirling, amidst massive public protests and an unfathomably egregious corruption scandal at the nation's largest company, government-owned oil giant Petrobras, which I might add, I had the pleasure of calling upon for years on end when I worked at Solomon Smith Barney. To wit, Petrobras narrowly avoided bankruptcy 5 months ago when the Chinese government agreed to lend it up to $7 billion. However, with oil prices having since collapsed, that credit line appears likely to be shut down. Consequently, Petrobras' bonds, totaling an incredible $90 billion worth, care of the hideous Fed-fostered Wall Street financing schemes that are destroying the world, are in free-fall mode, portending a potentially near-term default of one of the world's largest corporate debt loads. And this with the real already in free-fall beforehand. To which I can only say that, like Greece, the Brazilian citizens may well be on the cusp of an ugly, potentially bloody revolution against both their own government and the Western central banks that fostered its hideous outlook. And this less than a year before Rio de Janeiro is scheduled to host the Olympics, which we can only pray will actually occur as planned. Next, we have last week's Greek elections, which, just like the supposed bailout that hasn't actually been approved nor likely ever will be, were largely ignored by the mainstream in their bloodthirsty search for still uglier stories, of which there are many. But don't forget that Greece still has an effective debt load of roughly $600 billion of unpayable dollars, which I assure you will be defaulted, likely within the next year. And all one needs to look at to realize where Greece really stands financially is the stock of National Bank of Greece, ticker NBG, i.e. the world's most insolvent financial entity, whose record low price portends not a hint of bailout and, to the contrary, imminent bankruptcy. And last week's elections, which kept the anti-Syriza party in power, will only increase the odds of such, given that the traitor Alexis Tsipras, he who negotiated said bailout with the evil European Troika against the wishes of 61% of the population, will likely be replaced by a far more hardline anti-austerity candidate. Not to mention, the third-place finisher was the neo-Nazi Golden Dawn Party, which was particularly strong amongst the unemployed, which happened to be the most rapidly growing group in Greece. You know, just like what happened in Germany in the 1930s, in what turned out to be a worst-case scenario not just for Germany, but the entire world. Meanwhile, the other pigs, or as I have long called them, the PFIGs, as France, which was downgraded by Moody's this week, is in an equally desperate financial position, are rapidly headed toward Greek-style collapse as well. This week's utterly massive increase in the Portuguese government's deficit projections puts the continent's number 2 pig, barely more solvent than Greece, solidly within the scopes of the same bond vigilantes that will soon attack Greece's worthless bonds anew, as well as all of the world's insolvent sovereignties, unprecedented ZERP, NERP, QE, or otherwise, which, as it turns out, includes essentially all of them. And then there's the far larger pig that is Spain, which frankly is a bigger contagion threat than Brazil, Greece, and Portugal combined. A year ago, its wealthiest province, Catalonia, whose capital is Barcelona and contributes a whopping 25% of Spain's tax revenues, voted in what at the last second was decreed a non-binding election to secede by the whopping vote of 89% to 11%. I have loudly espoused my belief that as Europe implodes, the Catalonian secession movement would accelerate, which since last November's vote, Europe certainly has, including a 13% plunge in the euro currency, initiation of open-ended QE and NERP policies by the ECB, and an exploding immigration crisis that threatens the political and social fabric of the entire continent. And thus, just 3 months before what could be an historic election for Spain itself, where the anti-austerity, anti-euro Podemos party is expected to capture the prime ministership, we are confronted by yet another potentially historic revenge of the people vote. In this case, in this Sunday's Catalonian parliamentary elections, which, if the pro-secession parties win an absolute majority, could hasten the process of what could be a potentially bloody Spanish Revolution. And this in the Eurozone's fourth largest economy, or third, assuming the UK votes itself out next year, as the entire continent sits on the precipice of economic collapse amidst a global economic implosion that is not and will not spare anyone. Obviously, my list of possible and actual seminal events could go on far longer. As heck, I haven't even discussed the ongoing Chinese yuan devaluation, which just before it occurred in August, I described as the upcoming cataclysmic financial Big Bang to end all Big Bangs, which I might add not only has failed to slow the Shanghai Stock Exchange collapse, or for that matter global commodity prices, but has yielded a run on the undeliverable offshore yuan market, which has ironically caused China to desperately sell U.S. treasuries to raise cash to support the yuan by artificially slowing devaluation expectations. Which is probably why I wrote a follow-up article describing China as the most dangerous destabilizing force on earth. And heck, I haven't even mentioned the imminent bankruptcy of Glencore, the world's largest commodities trader, although I certainly have in recent articles such as yesterday's. When it inevitably collapses, taking $53 billion of debt with it, the giant sucking sound in paper commodities markets as it desperately sells billions of paper futures contracts to raise cash will be a sight to behold, which yet again was made possible entirely by the lethal combination of the Federal Reserve's hyperinflationary monetary policies and hyperdestructive Wall Street financial engineering. That said, in the interest of brevity, I'll simply wind up today's seminal events discussion with what not only may turn out to represent an inflection point in economic Mother Nature's winning battle with the force of fraud, but a new terrifying plateau in global wars of all kinds, from currency to corporate to governmental, which is the horrifying Dieselgate scandal that enveloped German carmaker Volkswagen this week, and as of this morning BMW as well. To which I can only say, get ready Mercedes and Audi, you're next. When I first saw this story earlier this week, I glossed over it, assuming, particularly in light of the relatively light media coverage, that it was yet another horrible headline to add to the never-ending list. Another corporate scandal largely indecipherable from the countless hundreds of others the world round, in terms of both scope and egregiousness. However, last night, when a Zero Hedge article titled, "Is Volkswagen About to Unleash the Next Deflationary Wave?" caught my attention, I decided to read up on it further. And when I did, all I could say is, wow, this may be one of the ugliest scandals in global corporate history, and it's occurring at the worst possible time for the collapsing European economy, to one of the world's oldest, largest, and most trusted companies, and with a whopping 270,000 employees in Germany alone, not counting tens of thousands working for VW-affiliated auto parts suppliers, it could take down Germany's economy all by itself, once its full ramifications are felt. Remember, Germany is one of the world's most indebted nations to start with, and taking into account its Atlas-like suicidal attempt to support the other pigs and economic collapse of its Eastern trading partners, it wouldn't surprise me one bit if Dieselgate serves as a major catalyst in the inevitable collapse of the entire European Union, which I might add is why we've all but screamed of how many black swans are circling about that we don't yet know of, which this clearly fits the description of. To wit, it appears Volkswagen's management mandated the installation of software to be installed in essentially all cars to fool emissions testing machines in many, if not all, global markets. The scandal arose earlier this week when the United States EPA questioned VW about it, which promptly admitted that the actual emissions from its diesel-guzzling cars are 10 to 40 times the U.S. legal limit, but within standards when its emissions testing machine sensors are turned on, fraudulently launching a test program that depicts emissions as much lower. The initial reaction included a plunging stock price, surging CDS default risk, top-level management resignations, the prospect of up to $18 billion of fines from the U.S. government, the likelihood that VW will never again be trusted, and oh yeah, the fact that it currently has an all-time high level of inventory, which likely will all be recalled. And yet, that was just the beginning, as this morning, not only did VW admit to doing the same in Europe, which likely will be followed by admissions of worldwide malfeasance, but apparently BMW has been found to be doing the same thing, even if the full details of its involvement are not yet known. Frankly, this is one of the ugliest, most unexpected corporate scandals in global history, and the scariest part is that it's just starting, likely to get much bigger, and involving one of the largest corporations in one of the world's supposedly leading political and economic nations. Heck, in my book, it's barely a notch lower than if JP Morgan admitted to illegally artificially suppressing gold and silver prices, which, don't worry, will emerge in due time. Frankly, I don't think the VW scandal's globally deleterious impact can be underestimated, particularly amid such horrific economic times to start with. Which is why the following quote from the chief economist of one of Europe's largest banks, ING, pretty much says it all. Quote, "All of a sudden, Volkswagen has become a bigger downside risk for the German economy than the Greek debt crisis." Boy, that's a mouthful. And don't forget, whilst all this political, economic, financial, and soon-to-be social horror is accelerating, the market for physical gold and silver is on fire, particularly silver, which is headed for a full-bore 2008-style shortage, in which no product can be procured anywhere, potentially in the very near term. I see that gold is up $25 this morning, whilst silver is up 2.5%, and global stocks and commodities are plummeting. Which, if the world's unprecedentedly large but rapidly collapsing market manipulation teams cannot curtail quickly, may well lead to said shortages far quicker than most can imagine. Not to mention the all-out collapse of the global commodity, currency, equity, and fixed income markets, unprecedented ZERP, NERP, and QE notwithstanding. Which is why the time is decidedly now to protect yourself whilst you still can, in whatever manner suits you best. To that end, Miles Franklin has conducted business for 26 years without a single registered complaint, and can help you with not only the purchase, sale, or storage of precious metals, but a variety of financial planning strategies we have honed over 2 decades of working with gold and silver. Consequently, if you're considering the purchase, sale, or storage of precious metals, we simply ask you to give us a call at 800-822-8080 and allow our staff of professionals, on average sporting nearly 25 years of industry experience, to give you a free consultation. And as always, I can be reached via email at ahoffman@milesfranklin.com. Thanks, and have a great weekend.